everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are 3 important things to pay attention to for the upcoming trading week. Now, as you were all aware, last week, a very low liquidity trading environment. Now, it's pretty predictable, right? We know it's a holiday week, a lot of people going on vacation, going to spend time with their friends and their family like they should. And by the way, we hope you had a fantastic vacation and Christmas holiday break. Now we come back to the final trading week of the year, and is it going to be much different? Well, let's take a look at our markets and see what's happening next week. First off, it's another low liquidity week. Matter of fact, it is the lowest liquidity week of the year. Now, why is that important? Well, liquidity is essentially our ability to get in and out of markets. So if, for example, you are jumping into an Olympic-sized swimming pool and there's plenty of water in there, great. You're not going to really risk too much, right? You might hit the bottom every now and again, but probably not, right? Deep water, you're going to hit that water and everything's going to be fine. But if you go into a low liquidity pool, meaning let's say the pool is 1/3 full of water and you dive off the diving board, you might hit your teeth on the bottom and have some injury. That's kind of an analogy. I know it's a bad analogy, but when you have a low liquidity market, things can move very quickly with not a lot of transactions, and the last week of the year is no exception. Yes, we have a full 5 days of trading, but there's going to be a lot of low liquidity environments, so be careful out there. The best thing to do, just stay away from the markets for the final week. But if you do, let's talk about some things that are happening. We go from low liquidity to 10-year bonds. Now, this isn't really intended to be part of the Monday Morning Must Knows, but really it's an informative piece telling you why this is so important and what the trends are. You'll notice that on the 10-year bonds, we've had a pretty pronounced downtrend going all the way back into 2018. But lo and behold, now we're seeing a series of higher lows, and those highs are staying about the same. This is what is called an ascending triangle. Now, we know that the Fed is talking about tapering, meaning the Fed is going to slow down its purchases and ultimately stop buying treasuries, which is the short end of the yield curve. If that happens, the short end rises, and that means that normally the intermediate terms, like the 3 and the 10 and the 7-year, will also rise. So if we see this rate start to increase even more, that's going to put pressure on the financial markets because it's a rising cost of capital. More importantly, it's going to put pressure on housing. Here is the Case-Shiller Composite 20 Home Price Index for next week. That's coming out Tuesday at 9 a.m. Eastern Standard Time. Now, why is this important? It's critical because, as you've noticed, there's been a massive move over the past 2 years in the value of homes. Right now, you're looking at a 19.1% year-over-year increase in the value of homes. I'm sure as homeowners, you're going, yes, we love it. Bring on the housing prices increase. Well, does this look normal to you? I mean, in all honesty, this is way too accelerated. Going all the way back into 2015 on the left-hand side of your chart, you can see we were under 5%, and here we are kissing 20. One of these things has to give, and if the bond market continues to rise, that means that there's going to be a demand and potentially a surge in the value of homes, but that will start to slow down the higher the bond prices get. So as the writing is on the wall for people to get higher rates, more people are probably looking to buy homes, and we'll get a good reading on that with that Case-Shiller Composite 20 Home Price Index coming out Tuesday at 9 a.m. Eastern Standard Time. But wait, there's one more thing to look at, and that is pending home sales. So we look at the price of homes. Now, how many are actually selling? On Wednesday at 10 a.m. Eastern Standard Time, you can see we have pending home sales, which tells you the number of homes that are currently under contract to be purchased. Now, I just wanted to set a historical norm here, and that's this red line you see flying across your screen. That red line going all the way back into 2014 gives you an idea of what the highs were. That's the highest level it was up until 2020. Lo and behold, out of the past 6 or 7 readings, we've been above that line, right around 7.5. This is showing that there's a lot more homes being sold, and a lot of it has to do with cheap bond prices. That 10-year stays nice and low. The Fed keeps rates at pretty much zero. Well, that's going to, of course, be a benefactor to the housing market. Housing prices probably start to rise from there. But as that number starts to lift, we could see some changes. Now, there's a lot of other things to talk about, but to be honest, it's a very quiet week. Next week, there's almost nothing going on in the financial markets except for pending home sales and a couple other small pieces of data. Now, my friends, is your Monday Morning Must Knows. We hope you have a fantastic new year, and we will see you in 2022.